at the dollar index, how it broke out to the upside and has challenged higher move highs. The trend, obviously, since the beginning of January has been a bull for the dollar index, mostly probably fueled because of the coronavirus. The market over the past few sessions has had a nice surge in momentum after the sell-off at the end of last week. And it's also showing what is happening with some of your major currency crosses versus the dollar, especially the euro US dollar, which we are going to get into now. So as you can see, the dollar index is in bullish mode. Now we're going to take a look at the euro US dollar, which today is hammering new lows and has come off support a little bit, but as you can see, it's still trading below this last higher move low that helped to sustain the uptrend for what was the bullish rally in the euro US dollar since the fall. Now, as you can see, just like the dollar index has been rallying since the beginning of 2020, the euro US dollar has been falling apart. Now, this has some fundamental and technical reasons. We had this last higher move high where we topped out and have been trending lower from. This is the head from a head and shoulders pattern that targets still down towards around the 108.88 to 108.80 area. So we're still a little bit short of the downside target for the head and shoulders technical sell. But we have the fundamentals that are driving this also. We have, besides the fact that there is the coronavirus, which affects everybody. We have Brexit, which is now in full swing. The UK is now no longer part of the EU, and they just have to haggle out their trade arrangements and what have you. There's a trade war brewing with the with Europe and or the EU and the US also. And now that the President of the United States has been acquitted and the impeachment trial is over, you can bet dollars to donuts, I would say, that the President of the United States is going to engage the EU on these new trade issues, especially since it's an election year. I would think that besides the fact that he would like to push this through because of the deal that's already been made with China and the future negotiations that are going on, this is the perfect time to put a stranglehold, if you will, probably the wrong words. Most people would say it's a little aggressive, but from a geopolitical standpoint, if you want to negotiate a trade deal, what better a time to do it when the body that you're looking to deal with is under pressure, because the EU has to make deals with the UK. We know that they're going to probably be forced to do that quicker and under ways that they don't want because they want their way. They don't want the UK gone, but guess what? It happens. Sovereignty is now the main thing going on in the UK. They're maintaining their separation from Europe. They are allies, but they are not going to be controlled by the council that runs the EU, which is not elected either. So that, I think, is going to weigh heavy on the EU for the next couple weeks and couple months. That being said, this bearish slide that we have right now with the euro US dollar is fundamentally and technically almost to the extent of its downside pivot, but long-term forecast also means that we're probably going to be in a sell rally forecast, making higher move or lower move lows and lower move highs continuously as we trade into the next couple quarters. The coronavirus is probably one of the biggest things. The euro seems to always find support around the $1.09 to $1.08 area, no matter what's going on in the world. This will be interesting to see as we hit these lower targets, if this does occur over the next few sessions or week or so. If we get down to that 108.80 area and we start to hold down there, I would say that it's probably not going to be because we're basing. It's just a pause before the trend continues lower. So we have a lot of fundamental variables that normally would not impact a currency so much on the overall trend. But right now, with the way we're looking at it, if the virus is not contained and start to subside soon, we know that come the third and fourth quarters for sure, there's going to be distribution issues, and a lot of economic numbers are going to be impacted by that, which are gauges for our economy, as well as other variables in our everyday lives. So with that, we're going to just look at this as a bear. It's a sell rally forecast. You can see the pivot at a $110.98 there, the last lower move high. That's our upside breakout level above there. We're targeting 111.45. I think that's about as high as you're going to get for a reaction to the upside. And the only thing I think that could stir a rally like that would be that there's a major sell-off in the dollar. And right now, we're technically bearish. The dollar have been since, even in this, though it's been rallying. We thought that this January rally was going to be a correction. But now because of the coronavirus, it looks like it's manifested into a full bull, where it is what it is. And if that's the case, the euro is the highest weight in the dollar index, and if the dollar index is rising, especially strong, it typically means the euro is falling, and also the pound, which we're going to now segue into. So there's our upside pivot, and yeah, below this 109.91 where we're at right now, we're just targeting this 108.88. So we still have almost a whole dollar move yet that we're looking for in the euro US dollar, and considering recent volatility, we may get that. So now let's move on to the British pound US dollar. This market has just been going sideways, but now it looks like we had this rejection here. We made a higher move high, breaking out of our sideways range, and then we established a lower move low, giving us the neutral opinion for the market. Stabilized yesterday, and today now we're leaning on support. The dollar is strong, and if the dollar is strong, you got to think that the pound as well is going to get hit, while the euro is getting hit, and all the other currencies are running for cover because of the virus. And I think that that's really what it is, because the pound has held neutral through this Brexit and has been in a rally versus the dollar overall since the summertime. So the fact that it was basing, but now I think the virus weighs heavy on the UK. I think they are our allies. They have a trade war issue now with the EU, as well as the US, because now that they're away from the EU, we have to renegotiate with them too. However, I think that's going to go pretty fair and pretty quickly. I wouldn't doubt, actually, if we have a trade agreement with the UK signed, sealed, and delivered before we have one with the EU. That's just my opinion. We'll see what happens, and we'll watch that. It'll be months before we know, but we'll be talking about that and looking at it. So right now, only a breach of this 132.15 higher move high from a couple sessions ago takes us off the bearish train and definitely gets us bullish, targeting an upside target of $1.3321. A failure here from $1.2902, though, however, has us very bearish, targeting $1.2777 as the British pound US dollar continues its correction. Remember, right now, the overall long term is a trend. Now it's becoming neutral, but we have on the longer term made higher move highs, higher move lows. It's critical we take out this $1.2902 pivot, which we're hovering above right now. We only have 29 pips to go. We break that 29 pips, I would not doubt that there's probably a lot of sell stops and a lot of volume that'll kick in there that will exacerbate any type of slide. But right now the markets are kind of quiet. It's 11 o'clock, and we know that we have the President of the United States coming out with a speech and whatever about the what happened with the acquittal and what have you. So that's probably why markets are quiet, as the European markets and all the foreign markets are closed, and now we're just running on the U.S. So now let's look at the U.S. dollar Swiss, because while we have two major currencies going down versus the dollar, well, guess what? We have this one too. Now the Swiss has been a bull against the dollar in most currencies for months now. However, right now, recently, as you can see, we made this bounce off. We set a low, and then we rallied like a week and a half ago, set a higher move high. And then we fell back a couple sessions ago to make a higher move low, and now we're hovering once again below potential higher move highs. So if we get a breakout to the upside of this 97.67, that's going to target 98.65. Now this is a big deal, because the US dollar has been rejected at parity so much by the Swiss, and with the way things are going, especially in the EU, and with the coronavirus, I think that you have a good chance at seeing this US dollar, Swiss franc break out to the upside, cross this 97.67 threshold, and push it up to 98.65. I think you're going to find a lot of resistance, because parity seems to be something the US dollar cannot cross versus the Swiss. So here's where we have to look at, where is Swiss strength? So let's look at the Euro Swiss real quick. And this is how you get the best gauge of market direction, is using the markets as a guide. Euro Swiss is very neutral today. Okay, now let's look at the British pound CHF. So we have the euro and the pound that are lower versus the dollar. Now the pound is lower versus the Swiss also. So the Swiss has strength as far as the European currencies are concerned. Then we have the JPY Swiss, which is coming up slowly here. It's loading, I think. Come on. seems to be having a little problem with the data here for the JPYs. Okay, well, let's go back to US dollar Swiss then. Maybe this will be easier. Okay, so for some reason that chart's not loading right. Anyhow, that doesn't matter. We're still a bull right now for the US dollar Swiss. The dollar index is carrying this higher. Now, here's what I have to say for all you US dollar Swiss traders. Right now, there's a bull in place. We have a potential head and shoulders breakout about to inverse head and shoulders. If you look at the low that we set back in January here, we have a shoulder here at the end of December. We have a shoulder here at the end of January. Now we've rallied all the way up. We're right here at this neckline. And just to give you a clue right here for where we need to cross, if we cross this little area right here, this puts us right into what we're talking about. So we breach this 97.67. Not only we make higher move highs, we also confirm a reverse head and shoulders breakout, and then that. See, this is not a big this is not a very big head and shoulders basing. You got to look at the range here, what we're dealing with here. It's very tight. So as far as upward projections, the head and shoulders would also have us going to about this 98, just below around 99 even. So this head and shoulders could push our upside target a little bit further. But then after that, that would be a technical target, and that would go with the fundamentals that are driving this right now. And hopefully, if we do get a rally like this over the next week or so, there's rumors that they're coming close to a possible vaccine or something to help inhibit the spread of the coronavirus. And if something like that does come out, where they have a success with that and they start to reduce the number of outbreak cases, then I'm pretty sure you're going to see the Swiss gain strength huge against the dollar and fall back. The dollar will probably get a correction because right now I think strength is coming because of the coronavirus. And if that fundamental starts to erode, it most likely you'll see a big profit taking because people who are betting on that position, because right now you have to think that there are plenty of people that are trading where they may be not going with their normal methodologies because they're trading the coronavirus. I hate to say it, but no matter what, inopportune situations in the global spectrum of things can definitely impact the markets, and there's ways to capitalize off of it. So, but they will bring swings, just like you can capitalize off of it once it starts to wane, which hopefully it will soon. It will snap back, and then we'll get back to our normal dollar Swiss situation where the Swiss is a bull, the dollar is going to be a bear, and we'll have other things to deal with, and we'll see how that we have to get to that bridge before we can cross it, correct? So right now we have the upside target up there. Only a failure from this 96.27 level has us back on the bearish campaign, meaning bullish the Swiss, and then we have a downside target of 95.55. So this market really has the potential to go a lot lower faster than it does higher. So we'll see how this happens. Like I said, if the Corona trade disappears and the hangover is over, boom, we're going to go back to reality. But right now, we're going to have to look at this rally here, and especially if we breach this neckline, you're going to probably get a surge of buying above 90 to power this through the 98 even area, pushing the 98.65. All right, with that, we're going to go and jump over to the US dollar Canada. So we know that the trade agreement has been signed between U.S., Canada, and Mexico. This is very bullish, the U.S. dollar, Canadian dollar, especially because of what's going on with the coronavirus. This market has been a sleepy bear, trending lower and then having nice big corrections. Not as big as this one. So this one, we're looking at a key pivot level at $1.3328. Any breach of this confirms a breakout to the upside. And as far as targeting higher levels, well, it's a coronavirus-driven trade. I think that the only way you're going to see this market turn around is if we have a turn in the dollar index and a easing of the coronavirus. This is a fundamental trade. I think that's going to still continue to explode. A breach of $1.3328 will have us pushing $1.33.5 in no time, probably pushing this up all the way up into the $9.34 territory very quickly. Now below here, it's going to, as you can see, it's going sideways and it's trying to buffer. It's not, the bullish momentum seems to be waning a little bit, but it's still making higher move highs. So I don't want to, if you're an aggressive bear, I would say you can be a bear underneath 133.28. You do not want to be short above that. And as far as how deep of a correction you're going to get, I don't know. It's tough to say right now with all the currencies falling versus the dollar for the most part. So right now we're a bull, only a fail above $1.3116. We're looking for a corrective slide right now. Only a failure from $1.31.16 would take us off that forecast and then have us targeting $1.30.33. So right now we're a sleeping bull. It's just going to creep higher. Right now we're riding the Corona trade. Speaking of Corona, nice segue now into the US dollar Mexican peso. So now this is a very interesting thing. You would think that with all these currencies getting the coronavirus, if you will, the U.S. dollar Mexican peso, it did set a lower move low today, and it's a little higher now on the day. It looks like it's trying to set a bottom, but then it looked like it tried to do that a couple of weeks ago, and it failed. So ironically, the one currency that the dollar seems to be weak again is the Mexican peso. Now, this could be because of the trade agreement that was signed. So, I mean, the fact that the peso would be stronger in the midst of the coronavirus just doesn't seem to add up. But then we don't know how much of an impact it's had there yet. So we're watching today's trading. Now, here's an interesting thing. We made a lower move low today, and right now we're just above the open of yesterday. If we settle above the open of yesterday's trade, let's see, the open was yesterday at 1866.3. So if we are right now, we're at 1866.24. Yeah, we're right there. If we settle just a few pips higher than where we're at right now, that's a bullish engulfing line with a short-term buy signal targeting the U.S. Mexican peso back up towards this 1894 level. As you can see, we got a little congestion here. In between these two pivots here, expect a choppy range trade. It's going to be tough. Only a breach of 1894 takes us off the bear campaign while we look for a bullish breakout. Where that targets, yeah, it's going to be a tough one. We have to first get up to that level first. I wouldn't fight a breakout to the upside above those levels, but I wouldn't look for too much to the upside either because the overall market is a bear. And considering that this market is so choppy when the coronavirus is going on, what happens once the dollar index starts to fall and we get a little relief from that trade? So we looked at that one. That's the trade for that. So that's the one that's really kind of like raising eyebrows. Like you would think, like how is a lesser cross like that being strong against the dollar? And then we have the U.S. dollar Turkish lira. So we know it's been going on in Turkey. They've had the avalanche and some storms and earthquake. They've just been hit by Mother Nature in the past couple weeks. It's terrible what happened with the avalanche and stuff. So, but coronavirus, I think, is driving this trade, plus the instability in the Middle East, as well as now the locking up of China. You got to remember, we're on the, Turkey, Istanbul. It's all on the part of the Silk Road trail between the Middle East and Europe and Asia. So it's kind of stuck in the middle, and we don't know the ramifications as to what's going to happen with that. There's a lot of mobility, and the fact of what countries can take care of what. I mean, they have the resources in Turkey to take care of this outbreak of the coronavirus, but the question is, what about their borders crossing in and out? What's coming in and out that could impact them? So right now, I think that the U.S. dollar index, even if it starts to come back on a correction, I'd be very leery of being a bear for the U.S. dollar or Turkish lira. Right now, it seems that it has a better chance of maintaining its bullish posture than to correct. Any break below this, any trading below this pivot of 598, which the market is just above right now, will keep us in a neutral posture all the way down to 583.84 down here. This would put us into I think a range trade, maybe give us some swing trading opportunities, and definitely looking for more opportunities to the long side than the short side. If you're an aggressive bear, I guess you could sell into this new high right now here. I wouldn't risk too far, and in my target level, I don't know. I just don't see it getting below this 583.84 anytime soon. So now let's go back to the Euro US dollar. So as we had seen, that market had come off of its lows. It's kind of quiet right now. I think the trade pretty much for the most part for the rest of the day might be over. We might see a little, it's heading into lunchtime hours. Maybe we get another surge come this afternoon. I think it's going to be indicative of the reaction to the president's of the United States speech, and what's going on with the State of the Union response, as well as how the stock market and other markets react to things from the president's response today. So with that being said, if you want to learn about that Japanese candlestick pattern that we were talking about, the bullish engulfing line that's setting up, you can go down to any page on our website, and towards the bottom there is a picture of the book High Probable Japanese Candlestick Patterns, and you can either buy it, share it, or preview it on any one of our web pages here and see if it interests you. And if you want to learn how to use the highest probable Japanese candlestick patterns to integrate it into your Forex trading or any market trading, actually it works in all markets, read the book, check it out, and keep and subscribe to our YouTube channel also, so you can get notified when we're streaming live and giving lessons or letting you know about when these signals occur. So here we go. That's it. That's the Euro US dollar. And with that, I want to say thank you very much for your time, and we will see you